General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.4.1 Disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Probably updated, it just look different. Let's do the work though. Today's Thursday. Tomorrow the market close, Good Friday. Four, two. It's interesting. We dropped and came back to closing price, but it was an expansion day. Let me see what it looks like on the daily. Basically completed a retracement to the daily fair value gap, swept that low. We accumulated our sideline low. This is confirmed. Right now it's looking like this Tuesday low is confirmed by this rejection here. What is this? I think it's unemployment. Yeah. And I believe it was good. Let me just double check. All the news was good for week 1. I ain't seen no red news yet. Yeah. Market going up on good news. We didn't test this order block. So anchor point confirmed, yes. Tuesday. Is this expansion playing out? It is. Was the terminus hit today? Probably was hit yesterday because we don't even really trade tomorrow. Well, 9:15. Yeah. Ain't gonna say. Daily delivery log, NASDAQ. kind of see it like this. Came and swept previous days low, untapped Asia liquidity. This is when Trump did that speech. New York reversal profile. Not classic, not a classic delivery due to Asia range. It's just that New York reversed. Let's look at the H1. We didn't come and retest this. Is this OTE? No, it's 50%. Okay. And you can kind of tell by, so 50% retracement. Price retraced to 50% of the weekly range. That 50% do be hit. New York OTE be hitting, and just 50% of ranges, period. To the daily. Oh snap. We still ain't hit Tuesday, Monday. I was gonna say we don't got no down candle. But this raid now, I expect this raid to hold. You can expect like retracements here, target, failure swing liquidity. Which we probably won't do nothing just because of the holiday, but this looks like the most common thing. We reaccumulated, put a wick here, just didn't have no wick. So this raid should hold. Retracements. For higher prices to take out plus out liquidity. Let's go to SPX. Came back to this H4 FEG as well. Kind of got the same thing. Came back to previous day's close. H4, if anybody get showing up for work on both assets. Synergy. Let's go to the H1. So we currently got this dealing range now. Does make sense to look for sales. Reached a premium. Let me take out some of this. Red box. It's interesting, but that is possible. You gotta think. If we left this engineer liquidity here, is this how you do it? Hold on, I might can do it like this and it'd be easier. Okay. All right, let me see. Let me try to. Okay. It is interesting. Hit this. Could come back down to regular trading hour open. Cause that is weird. So this will be my discount rate. Buys are cool from here, sells are cool from here. In the middle, I wouldn't do anything. Buys, sales are cool from up top. Buys are cool from 50%. Chart's definitely bullish though. Short term. It needed a retracement. Think about all the down weeks we had. Candles formed. You can see sales from the OP and buys from the fair value gap. Rather wait for prime position than get slaughtered in the middle. The middle of a range. Okay. See what the stocks did. Was an engagement day. So we almost cleared out this whole thing. We opened up so low, gapped, and left. Order pairing maybe up here. What's this? 660. It's not that big of a move. It's like a $5 move. Us leaving this though, we didn't have to sell off immediately. It didn't have to be some type of news. I'm surprised we getting previous days high. What time is this too? 10:30. That's a sign. He didn't take previous days high. Y'all watch that. Because we can just as easily come back down. Price is pulling higher. Targeting outside liquidity. I don't trust this move just yet. I would rather see buys. Mm, really from discount, but we just OTE it. Yeah, I'll be okay with that. Coming down here, buying under here to target higher, it makes sense. Buying from right now, it's atrocious. Discount of Thursday's range at least for target highs. Too high in premium for a buy to be worth it. Okay, we kind of got the same thing here with the buy side liquidity here. Mm-hmm. Tracements. Q 30. Tracements. 30. Everybody, yeah, makes sense. Target prices. Rise, I will wait on the sale. 2 week Q doing range. No trade. It was some 80 hours maxed out. Overnight session. Very large. $80 round. 2 to 3 is ideal. What did price deliver? Stay up there really. This time of year. Holy week. Not that much action for big plays. It's been scalping, base hits, environment. Next for similar days, sticking to the filters. System. There's rules for a reason. Notes and thoughts. Framework play out. Nah. Which I learned a pattern narrative for myself. stressing. Whoever's not there, you know what we want to see. And we want to see it. And what it's going to look like. What I watch for tomorrow. Mm, It's holiday. Oh, trader. All right, that's that on that. Have a good day. Peace.